Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So, interestingly enough, is that the dollar is still a lot stronger than you'd expect, at least logically. So, SFC, partial profit was playing the 108 based on the bull flag. So, depending on your technical view of the market, and an OTA can help you with all this, you have a new trading range, 110.50, 107.80. Hedge funds are pushing around all these currencies just like they push around the stock market. I mean, I like the FX market because I feel like the trends actually hold a little steadier than they do in the equity markets, but that's really up to you. It's really all about what do you feel most comfortable with. So SFC, rallied up. There was a gap there at the 111.77, and we've obviously filled that gap. So we were bullish in the U.S. dollar, and now obviously it depends. Trying all of us traders. What do we do next? Well, some of us think that the dollar will rally again, but again, it's broken through some support, and many are thinking that breakout was just a sort of a bear fake out, or a bull fake out, I should say, and maybe if you look at the longer term, the dollar seems very, very weak. So it always depends on your time horizon. Think about hedging. When you get into a trade, think of where you'd like to exit the trade, and try to act appropriately. So you get into a trade, and it starts to work for you. Well, start to think about maybe selling half your position, maybe selling a call, maybe buying a put. This is the way OTA teaches people how to trade. How do you manage your risk? That's really important. So you need to have a plan. And the plan is really important to hold true to the plan. So I think Steve wrote a lot of these points down, and that's how he teaches investors how to trade. Is again, he's going to talk to you about what your goals are and what your risk tolerances are. He's not going to tell you exactly what to do, but he's going to give you some really good ideas, and hopefully you'll be able to take those ideas and implement them. That's the key point. So dollar yen, we're looking at dollar yen, and the dollar actually was rallying there also, and we see the dollar rallied up, less, and I guess it was in March. Dollar broke 100, and I think that trade down to 96, and then we saw a huge run, and now we're seeing that sell-off back again, and dollar yen closed 105.34. So as Steve was pointing out here, what do? Sending a triangle breakout, the trend lines touches the long entry. Then what do? You're planning for a breakout. So this carry trade was starting to be broken. And the yen is strong. So, the problem is the dollar yen, when you look at it, the interest rate differential was really the trade. This is the way that everyone traded for so long. They wanted to earn the interest rate differential, being that the interest rate differential was about 4.75%. And now that some are saying that the U.S. is going to cut rates, some are saying the U.S. is going to increase rates. That's what makes it so challenging right now in the markets. And again, if you have a really very clear view on what's going to happen, well, you could probably implement it. I mean, you never know for certain, but the yen has been getting stronger, which means the U.S. dollar is getting weaker. Yuck has been dropping. And so we dropped all the way back down to around 104.30 today. Volatility is really high, so people are expecting the markets to jump around quite a bit more. And you see all the different trend lines. Well, there's lots of ways to look at it, but you can see that it failed at some point, and you want to have what I call the plan B. Plan A is I think my strategy is going to work. What am I going to do if I'm right? Plan B is what do I do if I'm wrong? So OTA, basically, no current position they were recommending. Sentiment is neutral. Support at 105.50. So Obviously, we're testing that at 105.34. Essentially, we're breaking down through that support level. So I think what Steve was saying is, probably a good idea, maybe at least one strategy, buy the 106, sell the 110 call spread. Well, that's probably not, at least according to that strategy or the technical levels of support at 105.50. That's not going to work that well if we're already below. So you have to decide, if we're at support, maybe it would make sense to buy the 105, sell some other option, maybe the 109, a couple months out, maybe the 110. But again, you have to believe that the U.S. dollar is going to hold on. If it's not a good strategy, and you may want to do the sort of the reverse strategy, right? Steve says, be prepared to change your mind. Absolutely. Maybe you do the opposite and look to buy the 105 put and sell the 101 or 102 put, whatever. There's a lot of ways, and it isn't just one way to trade this.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.